Hello, my friends. It's Robert Miner with Dynamic Traders Group with a brief video update for our YouTube and Twitter followers. I haven't done one in a couple of weeks. We're going to update three of the most popular markets that I know people are interested in, at least with these YouTube videos that I do, and that's with the S&P and gold and Bitcoin. Before we get started, happy St. Patrick's Day. I hope you all have a Guinness or two in your refrigerator for tomorrow, St. Patrick's Day. And I'm wearing my Ireland hat that I got over 20 years ago, my last visit to Ireland. It happened to be, I was there September 11th, 2021, on just a little tiny island off the coast and off from the town of Dingle, Ireland. Had a great trip up till then. I got to admit, it wasn't such a great trip after 9/11. Kind of changed the tone of the travel, but boy, met a lot of wonderful people while I was there, and hope to get back someday before too long. Do a lot more walking. This was a walking trip, so we walked for several hours every day around Ireland, particularly around the coast of Ireland. Okay, that said, let's get started with the stock indexes. This is the SPX weekly data. And I want to bring your attention to the position of the SPX. All the other stock indexes are in similar position. A couple of these indexes have made some pretty significant potential reversals, I should say, in this past week. Let's take a look at this coming up off the October 2022 low. This is the same wave count we've had for some time, except it has continued beyond the typical end of wave 5 count. So this is a 1 and a 2 and a 3 and a 4. Those of you who are familiar with Elliott Wave know that impulsive trends usually unfold in 5 sections. And more than likely coming up off the October low was section number 5 of this advance. What we're looking at here is the past week for just the third time since the October 2023 low is the SPX made a lower weekly close. The only other two times were right here where I've got labeled this 1-2 lower weekly close and this one other lower weekly close back in February. So the significance of this lower weekly close, it was made after tagging 127% external retracement from the January to the October low. That's a real key target for this advance. And it's also just below the 100% alternate price projection of the net ranges of waves 1 through 3, typically the maximum target for a wave 5. So that's the price aspect. Price factors at this recent high. 2 time factors, not this past week, the week before, and that's the 100% alternate time projection of this 19-week advance. That was right on 2 weeks ago. And 2 weeks ago, the week ending March 8th, was also the real simple high to high to high. So from the wave 1 high, wave 3 to wave 5. So 2 key time factors. So we have time, we have price, and then this past week, we had the weekly momentums made. They made actually what we call a triple look back, bear reversal from the overbought zone. So that's pretty significant. And they did this on what we call a momentum price bearish divergence. Higher price cycle, lower momentum cycle. Just indicates that the advance was running out of steam. Quick look at the daily chart. This is the daily SPX data, just coming from the October 2023 low. And this past week was one of the few times, again, in the past several weeks, of not 2 to 3 months, when the SPX made a lower daily close below a little minor swing low. It did that on Friday. What we want to see to confirm that a weekly high is complete is 2 things. We want to see, one, next week, the SPX make a lower weekly close. And given the time, price, and momentum position, I suspect that more than likely that's going to happen. I know we don't need to forecast that it's going to happen. We simply want to know, because of the time, price, and pattern and momentum position, if the SPX were to make a lower weekly close next week, it would be significant. It would indicate that a weekly high is complete, and I suspect, as I've described in special reports to subscribers, it will be a monthly high, but we'll update that in the weeks ahead. And on a daily data, our daily close below 50.7865. That'll be another signal that, again, at least a weekly high, that's a high that lasts 3 to 5 weeks, is complete, and the market would be sideways to down 3 to 5 weeks. That's what I'm looking for in the days ahead. So before we continue on with gold and Bitcoin, just a quick plug for my most recent book. It's only been out 2 or 3 weeks. It's available on Amazon. It's the definitive guide to the U.S. election cycle and stock market trends, and it's the most comprehensive study and realistic, practical study of the election cycle and the stock market and those particular periods during each year, which have a strong bias that you can use as part of your trading plan. So if you trade stocks, if you trade the stock indexes, this is really required reading, I would think, for you. It's available on Amazon in paperback or Kindle, so check it out if you're a stock trader. Okay, let's get going and take a look at gold. So this is the weekly gold close data, the closes for each week, and it's going back to the October 2022 low. We had an advance, I got labeled a 1, a correction right to the 62% retracement. We had another advance, we had another correction. I don't have the retracement on here, but it was right almost to the tick, 50% retracement. And then we had another advance to a new high. So this is unfolding exactly as the last video I did for those of you on YouTube and Twitter about 4 weeks ago. So it just elected our go long trade strategy. And what I want to emphasize now is gold is probably just in the initial stages of what's going to be a significant continuation of the bull trend. So it's not too late to get in. It's not too late to add positions. And I wouldn't dilly-dally around and wait for some ideal pullback to get in. You can always use an ETF and you can adjust your position size so that you keep your capital exposure within the limits of your trading plan. But, if you wait, you may be too late. The beauty of the immediate setup for gold, again, this is weekly closing data, is this little closing low that was made the week ending February 16th. Your stops do not have to be any further than that, because if gold were to decline and close below 2024, that would void any potential continuation of the bear trend. So that's where our stops are on current long positions. And once again, this is something we update 3 times a week in our DT reports. On our daily, I'll go real fast on the daily chart. This is the daily closing data. More than likely, gold's about to finish a little ABC correction. And so there's some time factors. And of course, our daily momentums are oversold, that more than likely by the first of next week, gold would probably complete a minor correction before continuing the bull trend to above the March high. So that's where we're at with gold right now. And I think this is going to be a great setup. Not setup, but a continuation of the bull trend later this year. Don't miss out. So this is Bitcoin weekly data from that November 2022 low. By the way, I just, about a week or so ago, released a 16-page big picture report on Bitcoin for our DT report subscribers, and really a comprehensive report. It involves what should and should not happen following this so-called halving next month. And I think if you do trade Bitcoin, that's a report you want to have, because I haven't seen anything written from this perspective by anybody. So consider that if you trade Bitcoin. Where are we at right now? I think right now we're really close to making a top that's going to last for several weeks, maybe a couple of months in Bitcoin. Later this year, later in the spring, as we get towards summer, I think there's going to be another huge opportunity on the upside. But before then, I think we're going to see a 20 to 30% decline. And I base that on a probable 1 2, again, this is Elliott Wave stuff, 1, 2, 3, 4, 5, and the position right now of Bitcoin has just come up to some of the extreme price targets for an end of wave 5. It's really typical end of wave 5 accelerated activity, and of course our weekly momentums have been several weeks a dual look back overbought. I'm usually looking at the 13, by the way, 13 look back. So that's getting in a position from where multi-week and sometimes multi-month highs are complete. So just keep that in mind if you're interested in Bitcoin, of the potential at least, that we're pretty close to beginning a 20 to 30% decline. But later in the year, sometime getting close to late spring to early summer, I think we're going to have another terrific advance. And that's when you want to be prepared. That's when you want to understand what the position of the market is in those weeks ahead. Well, that's it for today, my friends. If you're interested in what you learned in this video, check out our DT reports at dynamictraders.com. We update those 3 times a week. That's it for today. It's Robert Miner, over and out for now.